Good evening, friends. I think the two events that took place in less than 24 hours. One is that FOMC did not hike the rate of interest, did not reduce the rate of interest, but has given enough hint that March may not be the month where one should expect the rate cut. And then today at 11 a.m., Ms. Nirmala Sitharaman presented the budget, which is more of an interim budget or what on account, whatever you used to call it. Why it is interim budget? For the very simple reason, because there will be election happening. And the new budget will get presented by the new finance minister somewhere in July 2024. And hence, market was not expecting too many things, because normally these budgets are not to expect too many things, because this is not a full-fledged budget. And if you look at going by the historical standard, the budget speech lasted only for 58 minutes, is less than 1 hour. But it does give an indication what government intends to do going forward. And then again, what impact it would have on the market. So what I'll do, first I will concentrate on the budget because that's the theme of this, and also briefly touch upon the FOMC meeting. But before I begin my webinar, just a small disclaimer that this webinar is just to enhance your understanding about the equity market. Please consult your financial advisor before buying, selling any stock. Investment in the equity market are subject to market risk, and past performance is no indicator of future returns. Now, if you look at this budget, highlights, I think one theme that came out, and in fact that theme also came out when the government came out with that economic report review, that global uncertainties are increasing. And if the global uncertainties are increasing, how do we make India a strong enough, even if there is a not so great thing happening in the world, it does not impact the growth of India. And I think that's what this budget reiterates very loud and clear. Okay, they want to make Indian economy resilient. So even if there is a stocks available in the global economy, it does not impact too much. Second thing has been the infra. And if you remember last year, government has announced 10 lakh crore on the infra. Of course, government will not be spending 10 lakh crore this year. It will be spending 9.5 lakh crore, which has been revised a little downward because of some slowdown in the spending in infra. But for the next year, the same increased to 11.11 lakh crore, which is the highest ever amount ever spent on the infrastructure. And then Gati Shakti project, where every agency, so government wants to focus clearly on the infra. Now, not only government want to spend, it also want to encouraging state government to keep spending money on infra. And if that happens, I think it can have a multiplier effect on the economy. See, again, finance minister made a very statement, loud and clear, we want India to be a developed economy, that Viksit Bharat, that's the words he used in a budget speech, by 2047. We have an ambition that we discuss about from 3 trillion to 5 trillion, 5 trillion to 7 trillion by 2030 or so. And in that direction, the government want to spend, not only government doesn't want to spend alone, it also wants state government to spend. Of course, the private Capex is also a need of the hour. So 11.11 lakh crore has been basically this one. Since it was an interim budget, no change in the direct or indirect taxes. And yet, government want to maintain the glide path on the fiscal deficit. So if you look at it, last year same time, the fiscal deficit was 5.9% estimated, which has been revised to now 5.8%. That means there's an improvement in the fiscal deficit. Normally we don't see that. In fact, normally we see deterioration in the fiscal deficit purely because of government would overestimate the income and underestimate the expenses. And normally the fiscal deficit normally go up, never comes down. And this time, from budgeted estimated of 5.9% fiscal deficit will be 5.8% for this financial year. That is financial year 2024. The big surprise and positive surprise for everyone that for next financial year, that is FY 2025, the fiscal deficit is estimated at 5.1% of GDP. Now that's a substantial drop of 5.8 to 5.1. In fact, if you happen to listen to some of the economists and other experts, people were thinking about 5.3 to 5.2 kind of a scenario, but 5.1 has come really a pleasant surprise for everyone. And the next year, the 1 year after that, that is FY 2025, 6, it's likely to, in fact, there's a typo error, for FY 2026, it's likely to come down to 4.5%. So from 5.8 to 5.1 to 4.5. I think the government wants to focus, and that's a very, very smart and logical way to do that. Because higher the fiscal deficit always creates problem for the economy. And then once it's a problem for economy, it's problems for the market and so on and so forth. I think government wants to maintain that glide path. And it's again committed that we will achieve 4.5% by FY 2026. While IMF has revised India's growth, government continues to believe that this financial year we will grow at 7.3%, and next, that is RBI estimate that we will grow at 7%. But if you look at the nominal GDP growth for FY2, what is nominal and what is real GDP? So let's just explain you very simple layman terms. Real GDP plus inflation is nominal GDP. So normally, nominal GDP will always be higher than the real GDP. Why? Because there will be inflation, unless some countries where there is a deflation. So government believes that for FY 2025, India is likely to grow at 10.5%. What does this mean? It means in absolute value that India's GDP at the end of the next financial year would be 330 lakh crore. India's market cap is 380 lakh crore. In other words, we are running in excess of 110% in terms of market cap to GDP. And this FY 2025 I'm talking about, not 2024. In 2024 would be near about 294, 296 crore, lakh crore. That's what the estimates are. Now, if the economy is going to grow at 10.5% nominal, the gross tax revenue is estimated to grow at 11.5% for the next year. Now, if you go by the historical standard, I think government seems to have estimated it on lower side. And I don't know why they did that actually. And if you further bifurcate that between the gross tax revenue into direct and indirect, the direct tax revenue is expected to grow at 13.1% and indirect tax is expected to grow at 9.5%, which I personally believe is quite reasonable. So I don't think the government is going to underachieve that. In last couple of years, what has government has been doing is that they are putting the numbers on a lower side and they are overshooting the target. So I think that's what's going to happen maybe for FY 2024. Of course, these numbers may get revised as in when the July 2024, the new budget comes from the finance minister. If you look at within direct tax, because direct tax is a two component, am I right? What is the corporate tax and another personal income tax? That 13.1% I'm talking about, where would this come from? The corporate tax are going to grow at 13% and personal income tax, that is you and me pay income tax, is going to grow at 13.1%. Now, assuming the tax rate remains the same for the corporate India, one should expect corporate profit to grow at 13% for FY 2025. And that's the basic assumption that if you remember, in my Equity Outlook 2024, I had suggested that I expect for FY 2025 Nifty 50 earnings growth at 11%. Right now, based on the estimates, the government believes that corporate profit could grow at 13%, which is fair assumption, assuming the tax rate remains the same where they are and there are no changes in July 2024 budget. since fiscal deficit is going to come down, government borrowings are also going to come down. So there are gross borrowings and net borrowings. For FY 2024-25, it will come down to 14.13 lakh crore. That is gross borrowing, as compared to this year of 15.43 lakh crore. In other words, near about 1.3 lakh crore decline in the gross borrowings. In the net borrowings is little marginal difference only, 11.75 lakh crore versus 11.81 lakh crore. So that's a marginal difference of 0.06 lakh crore. That is 6,000 crore only this one. What has come as a big surprise? The government want to make India a future ready. You know, always in India we have been little less spender on the innovations and R&D. And government has said that we will give 50 lakh interest-free loan to the people, those who are in the R&D. They come out with the product which can take India to the next level of growth, and 1 lakh crore has been allocated for that. That's a very substantial amount on that front. So if you look at, and if you really understand that what government want to focus on, where the money is going to get spent, the government has identified 8 key areas. Drinking water. So if you look at the 4 pillars that government says that, you know, Garib, Mahila, Annadata, and the youth. These are the 4 pillars. And if you look at this 8, somewhere that comes in. Drinking water, that's a to the each and every household. Housing, especially in the rural Gramin housing. Sanitation, which is very critical. Green energy, whether it's an EV, whether it's an solar, and so on and so forth. Health has been really focused very clearly. Education, youth, you know, government in the speech did mention about number of IITs and Skill India program and so on and so forth. Agri, that's again Annadata, and the rural development. I think it's very, very critical. And these 8 areas government is going to spend heavily. What does this mean basically? If this is going to be spent, the company, those or sectors that are relating to this are going to be the major beneficiary of the government spending on that. Now comes to the disinvestment, because we all market people want to understand how much government is going to disinvest. Now, I was a little surprised, you know, if you look at the budget estimates for the FY 2024, when was first Feb 2020, when the budget was presented, it was put at 51,000 crore. So I am referring to this number. And despite the market has been so good, government has revised it downward to only 30,000 crore. Now my only grudge, worry or concern is that the market has been extremely good, isn't it, in FY 2024? And that good market, government should have ideally should have used it to actually overshoot the disinvestment target. But unfortunately, government did not do that. Now, learning from the past, government has only kept 50,000 crore, which is less than the budget estimate of FY 2024 to only 50,000 crore. So this is less than 1,000 crore. The key is that how quickly government is able to divest it, which is going to decide. But it's not a very substantial number in the overall scheme of things. Why? Because we are talking about the GDP of 330 lakh crore, where even if you are going to undershoot in terms of disinvestment target, is not going to put lot of pressure on the deficit numbers. But anyway, it's a 50,000 crore. And I think government, see, unfortunately, what's going, this is an election year. So till the new government forms, no disinvestment process is going to happen. So assume that the budget comes in the month of July and then you start disinvestment process. It reduces the window, which normally on a non-election year, that window is available for the full year. In the election year, that window gets reduced to only 9 months. And I think that's where very, very critical. If government could not do it 51,000 crore and could achieve only 30,000 crore when the full year was available and market was good, will the government will be able to I think government need to show some amount of aggression for the disinvestment. Otherwise, again, it's a reasonable number. It's not something unreasonable number, am I right? The only thing government has to really show the intent there to see that these numbers are achieved of 50,000 crore. Another good thing, and of course, good thing I'm saying because if you go back last year budget document, the government is going to end up spending more than what they predicted last year on the subsidy. But what really gives a comfort level, trajectory seems to be coming down. Why I'm saying so? In FY 2023, that includes Manrega also, we spent 642 lakh crore, 6.42 lakh crore, which came down to 4.99 lakh crore in this financial. That's a revised estimate. It has gone up a little bit from what it was budgeted, but it has gone up, but it's year on year it has come down. And government intend to bring down to 4.6 lakh 11 crore subsidy. Why subsidy is very, very important? Because if you more subsidy, more pressure it can create on the deficit side. And I think from FY 2000, which was an exceptionally bad year, where it went to 8.18 lakh crore, it's come down to likely to come down to 4.7 lakh crore, which is a subsidy. As long as this path remains little lower, it's very good. And another good thing is that since our GDP is growing and subsidies coming down, as a percentage of GDP, subsidies are coming down. Now that's a very good sign. I must tell you, logically, I would have appreciated if government basically, so if you look at each and every data, food subsidy went down. If you look at the fertilizer subsidy went down. This petroleum subsidy moved up actually. It was much lower number in the budget estimates. And if you look at the Manrega also, from 1 this came down. And I think government want to further bring it down, all the numbers, all 4 numbers in the next financial year. I'll be very happy if government basically does that. Why? Because a percentage of GDP, if lower the number, it gives lot of comfort level to the investors. It gives lot of comfort level to the institutional investors, domestic as well as the foreign. Now what government is saying, rolling target for Jefferson GDP. This is just to summarize what government is saying. These are revised estimates. 5.8 fiscal deficit, which will come down to 5.1. We are summarizing now. Revenue deficit from 2.8 will come down to 2.0. Primary deficit from 2.3 to 1.5. Tax gross revenue 11.6 to 11.7 growth I'm talking about, okay, which I believe is quite fair. And non-tax revenue 1.3% GDP to 1.2%. And central government debt, which is 58%, will come down to 57.2%. So in other words, we are seeing improvement across all the data points, and which is a very good data to have it. Of course, the market did not move up despite that thing. And there are various reasons for that. So you don't have to blame everything on the budget. So if you look at the budget speed when started, the market was 21,796. When the budget speed concluded, it was 21,760. That means only decline of 36 points. Am I right? It's not a major decline. So in fact, its market moved in a very narrow range. And of course, as I told you at the beginning only, it was lasted for only 58 minutes, which is less than 1 hour. But overall, and see, remember, yesterday the US market fell very substantially. Whether it was Nasdaq, Dow, S&P 500, and so on and so forth. Okay, and when you look at this, the market overall decline from the post-budget split 99 points in Nifty, and for the full day, that is from the opening to the closing, 29. But there's a one concern I must tell you. This fall does not, because there are more company decline as compared to the advance today, which clearly suggests that the sentiments today was little low for the rest. Not necessarily for the budget, but I think market will say, okay, this was an interim budget. We don't want to read so much into this. Let's see the July budget, and then we can make some sense of that. Now, try to understand what happened today. If you look at it, this portion, PSU Bank up by 3.4%, Bank Nifty up for a change, purely because of the government borrowings which are going to be do down. In other words, the mark-to-market, the treasury will show some gain, and that's what is reflecting. But otherwise, Sensex was down, Nifty 500 was down, Nifty 50 was down, and so on and so forth. Even small cap were down and large cap, mid cap were down. In fact, they were down more than the large cap for a change. If you look at which company did very well, Hutco was up by 20%, NBCC was up by 10% purely. You can say this for purely because of budget. But I don't think Infibeam or Godrej Consumer has something to do with the budget. 197 down by -20%. We all know why. Paytm has been, some news came yesterday post-market hours from RBI putting restriction on Paytm. And it was expected before the market opened, before the budget speech started, the scrip was down 20%, so it remained at 20%. But some of the fertilizer company that you can see, like Deepak Fertilizer was down by -6%, LCF was down by 6%, 5%, and so on and so forth. But most of this company nothing to do with the budget. Let me be very honest with you, whether it's gainer or losers. Now, normally how market behaves post-budget, because that's what you would always want to know, am I right? So if you look at it, the picture doesn't look so very rosy if you go by the last 5 years or so. Why? Because market out of 5 times, 4 times it went down. 2019 interim budget market went up by 0.4% 1 month later. But normally the market doesn't look very rosy post-budget. There could be various reasons for that. Now you would say, "Arey, to fir to nikal jana chahiye." But that's not true, because if you look at the 1-year return post-budget, that is budget to budget, normally market goes up. So don't get fooled by the short-term movement of the market post-budget. Normally budget to budget, normally market goes up. For 2 years, that is 2014 and 2019, we have taken previous day budget gain, previous day budget closing till the July 2019, July 2014 and 2019 budget date, because we did not consider what we call the interim budget. So that data that you see for 2014 to 14-15 from Feb to July, okay, and something similar happens in 2019 also. Am I right? So that's what we have done that. So normally 1 month doesn't look very rosy, but 1 year looks extremely rosy. So if you invest during the budget time, probability is very, very high that market would have been at a higher level by next budget, purely because of reforms. So what should be a strategy now, post-budget strategy? Because that's a very critical question. करना क्या? Budget तो आया, चला गया. अभी करना क्या? The market did not move either way during the budget speech. And post-budget also market did not. And one of the reason is that this budget has made no changes in the direct and indirect taxes. कोई changes नहीं किया government ने. There was expectation कि STT में थोड़ा कटौती हो जाएगी. There was an expectation that अपना personal income tax में, because government want to be populist because election आ रहा है. So I think let this government be populist, and they will give some kind of a stop to the Aam Aadmi, so that they get winning chances or probability of winning. I think government seems to have assumed that they can win election despite not giving any stop to the Aam Aadmi. And I think so there is nothing called populist in this budget, okay, which was feared. So there is no change, and I think sometimes the status quo is also reason not to change in the tax. So there is no change that can impact the market sentiment, negative or the positive. I think the budget continued the same government policy which they've been articulating for last couple of years, whether it's focusing on reforms, Atmanirbhar Bharat, taking India to the developed economy status, railways, focus on tourism, and so on and so forth. So I think in line with what it has been said in the past. So there is nothing called which came as a surprise, either positive or the negative in this budget, and hence market did not move either way. So what does it mean? In other words, don't expect any budget impact on the market sentiment even tomorrow and day after tomorrow and so forth. I think market will now move on the global factors, geopolitical factors. We are in the result season, am I right? And what kind of commentary and results India is going to give? Okay, so there's few key events which are lined up in the next couple of weeks or months. One is definitely next week the monetary policy from RBI, 8th Feb. Then the market will go in the election mood, and then market will decide who is going to come and who is not going to come and who is going to form the government and how many seats and so on and so forth. Fed policy, 20th March again, Fed will meet and again give an indication. So right now rate cut looks out of the table, but it will give an indication, should we expect in the month of May rate cut or we should expect in the month of June. And of course the election outcome, and post that again the budget is which is going to come, which is basically, there are few things that market will closely watch. And I think one data which I was reading, that there has been deficit of rainfall in the month of January. And there's another article which was saying that some of the wheat producing states are going to face a little warmer climate, which is not something good for the output for the wheat. Either its output gets impacted or the quality of the wheat gets impacted. So I think market will definitely start looking at next couple of months what kind of a prediction coming in, all the El Nino, because whether it get El Nino effect gets over by June, July, August, so it all depends, because southwest monsoon is a very critical for the agriculture and for the farmers' income and the rural economy. So that's what market is going to do that. And as I said, July budget will definitely give some indication whether how much acceleration that we can see in terms of reforms. So if you ask me very frankly, what would have been your strategy yesterday and what will be your strategy today, there is no change because of budget. The market, there is a status quo in the budget in terms of direct and indirect taxes, and hence market, we continue to believe, which we stated in the January also, that market is going to make a very nice base this year, which will make handsome returns going forward. That's all. This is not 2004, but going forward, this market should give a very good what we call returns to the investors. So that's what we believe that's going to happen. Now, what are the sectors that's going to benefit? Is it visible? My PPT is visible? Okay. Can we just show that? The sectors to benefit. Definitely the defense, railways, because that's what the government has said. We know they want to spend money on defense, they want to spend money on railways, they want to spend, banks will get benefit because of mark to market, that's what we saw. But we also need to, this is basically based on budget, but there will be some counter cyclical also, and overall we need to wait and watch. Infra-related companies, I think government is clearly going to spend 11.11 lakh crore as compared to 9.5 lakh crore this year. So that money is going to come, and that's going to come. Companies engage in green energy, whether it's a solar, whether it's a EV infrastructure, and so on and so forth. That should get major benefit from this. And tourism, I think government has spent a lot of time in terms of tourism in the budget speech, giving an idea that how tourism we can develop. That really, and in fact, they want state government also, and they are going to give a rating based on the infrastructure that's been created for the tourism. So I think these are the 6 focus area that government is focusing on through this budget speech. And many companies and sectors that are in this sector are going to get benefit out of that. How companies get advantage of that is a different story. But this is what the theme that's been played out in this budget speech. With this, I would love to have a question answer from all of you. Naveen is saying, sir, I'm a big fan of Sunil Damania, Mohit and Saurabh Mukherjee. Thank you, sir. I almost followed every webinar of these 3 people in last couple of years. I would like to understand the regulation part under which is blocking for PMS fund manager to express his views on stock. I often this response from Damania sir, whereas if I look at the Saurabh webinars, he was always talking about stock specific, even though he's also manages PMS. So, you know, every fund manager has a different interpretation of the regulation. Now, in our system, we have Markets Mojo, we have PMS. That's one is a retail product, one is a PMS product. And our score on the site changes automatically without any human intervention. Suppose if I make a comment here, which is contradictory to the comment that is available, score changes on the website. And for example, if I'm getting out of that company in the PMS, but the score on the website says buy, SEBI will say, boss, तूने तो उसको बोल दिया sell, लेकिन company buy, and you are making an exit. I think you are doing basically asking investors to buy because you want an exit, which other fund managers don't run a risk of that. Am I right? And other fund managers basically purely go by the human, what we call this one. We have an IP here. An IP decides. So sometimes I may something, but tomorrow IP changes, which I have no control. Am I right? And if the score changes and if we do change in our view, you will say 2 दिन पहले तो उसने buy बोला था, अभी तो sell कर जाए, and vice versa. So we do run into a regulatory problem. So the problem that Saurabh Bogri does not have, but I have, is that we do have a website where we analyzed all 4,000 companies. We give score of the 4,000 companies. And second thing, Saurabh Mukherjee has a human way to recommend buy, hold and sell. We have an IP to recommend buy, hold and sell. So that's the reason I resist from, because I don't want to err on the wrong side of the regulation. Am I right? And hence, out of abundant precautions, I've stopped talking about the company. Mr. Fulwani is saying whether FPIs are still in the selling mode or in future. I think your question is that will they be continuing in FPI would be continue to be in a sell mode even from now on? See, they will also look at what's going to happen, the global factors. It's not only a function of this budget. This budget has no main changes. So there is no reason why FPI has to change their view, positive or negative, based on the budget, today's budget. There is nothing. Our sense is that we did mention in beginning of 2024, we did receive a lot of FPI money in 2023. And we did predict for full year, we should expect moderation in the FPI inflow. And we continue to maintain that in 2024, there will be a moderation in terms of what we call FPI flow. So if you look at it, what happened from last budget to this budget, if you can look at this data, I can show you that. So this data is available. Can you see this? From last budget to this budget, if you look at this data from FPI, there is a substantial, 1.74 lakh crore came in. This is from 5294. Of course, I made this presentation. I did not present it because in the interest of time. But if you look at it, 1.74 lakh crore has been invested from last budget to this budget. Do we expect similar kind of numbers from this budget to next budget? The answer is no. Venkateswara sir is saying, please intimate the stock which will benefit from the interim budget. Sir, I did give you some hint about which sectors will do well. As Naveen has said, why are you not talking about stocks? I can't talk about stock specific. Please use Markets Mojo website. Look at the stocks which are strong buy and buy, which are Mojo stocks, and you can pick and choose based on that, sir. Other option that you can continue with this question. Other option is that, sir, you can look at it this way. The sectors we I mentioned about, and look at the score of those companies on a website. If they are buy and strong buy on that sector, that's another way you can pick and choose. Okay, Varun is saying every day there is also volatility. Some day most of my portfolio is losses and some other way winner. Sir, kabhi khushi, kabhi gum is a part of the market. Don't expect market to have a one-way movement. वो होता नहीं है. कभी ऊपर जाएगा, कभी नीचे. That's a volatility. That's what, and this volatility will continue. Don't expect volatility to subside in the near future purely because of the events will line up, and that events will not allow indices to settle at one direction. It will be up, it will be down. So my sense is that this volatility will be there, part and parcel, and accept volatility. I keep saying, Varun sir, we should make volatility as your friend and not your enemy. The moment because if you make a friend, then you will take it in a very right manner, the volatility. You will take it in your stride. The moment you make volatility as your enemy, then it's a problem. Am I right? So this is going to remain there. Accept it and move on in life. Don't basically get too much perturbed by the volatility. Mohit Seth is saying, can we expect turnaround in chemical companies as they are making best? See, it all depends on what is happening in China. China did announce a stimulus package, which has given some hope to the metal companies. But the risk reward from this level for many of the chemical companies looks a little favorable. So, but it's not going to happen that आपको 3 महीने या 6 महीने में बहुत बड़ा पैसा मिल जाएगा. I think you need to play a little patience game in this chemical sector right now. It looks like. So be patient if at all you wish to take a exposure to chemical companies. But if I have to put it this way, over a period of 12 to 18 months, probability is very high that you can make decent money on some of the chemical companies. Ankit, 2 stocks declared Diwali portfolio has been removed from their respective category. Whether we have to remove these stocks also and add new ones to stay invested with that stock. So Ankit sir, I think Karan is going live on Monday and he will explain and he will discuss more on those Mojo 1 Diwali portfolio. So my request would be wait for 2 days. Karan will explain this on Monday webinar. RM is saying, so for senior citizen, Mojo 1 is suitable, Mojo professional. Sir, it's all depending on risk appetite. See, age has nothing to do with your risk appetite. Someone who earns 20,000 and is a 21 age, I wouldn't recommend equity if he has some responsibility. And someone who is age of 75, but he has enough income and he can afford to take risk, he can take that risk. So I think, so don't say senior citizen. So it's all depending upon what is a disposable income that you have, what is the money that you don't need for next 3 to 5 years, even to a senior citizen, which you can invest in equity market. And if that answer is yes, I don't mind, I don't need this money for next 3 to 5 years, because why? That I have other income which is taking care of other what we call assets, which can take care of my daily expenses for next 3 to 5 years, then go with Mojo 1, sir. That's the best way. And see, remember, Mojo Professional is a subset of Mojo 1, because Mojo 1 includes Mojo Stock, Turnaround, Reliable, and what we call consistent, and Momentum, sorry. While Mojo Professional only consists of Mojo Stock. So there are 3 more additional strategies. And I would suggest that you should go for Mojo 1 because it's a nice, so each one has its own strength. And if you can play on each of strength, I think it will make a lot of exciting investment journey for you. Overall, your return from Mojo 1 from 3 to 5 years should be high as compared to Mojo Professional. That's what my understanding is. Frank is saying, Barron's news this morning, quote, odds of a rate cut in March, jumped by Karisma Vanjani. The odds that the Federal Reserve cuts interest rate in March moved substantially higher as the treasury yields declined. Fed fund rate gives a March a 64% chance that the central bank cut interest rate in March. According to the CME Fed would, that's the up from 41 to the treasury yields have shown steeply in Wednesday for a variety of reasons, including expectation. I doubt, sir, your data is right actually. Of course, he writes well, Karisma, for the this one. But I doubt that. Okay, let me see. Since you are saying this, let me go to the this one to let's see whether you are saying is right. Because my understanding was that, on the contrary, this has come down actually. But anyway, since you are saying so confidently, let me go to the Fed Watch tool and let's see what it basically says expectation for the March one. Okay, let's go to the March one. No, the 31st January. Okay, the 28th, this one. Probability of Fed making 28th March, I say 62. Oh, they talk about the rate. No, okay, 1 minute. The current is 5.25, so 62.5. No. I think you are making a mistake, sir. The 62.5 is basically for March. Can you see my screen? Huh? No, it's not visible. Oh God. Okay, I think I made some changes in my setting. 62.5%, sir, as of now, is no rate cut. The 25 bips rate cut is 37.5. Am I right? On the 28th March. So I think you're mixing up, Frank, some data here and there. And if you go back to the 1st May, which is there the rate cut possibly 61.4%. Okay, and if you go to the June, that is 12 June, the rate cut of what we call is basically, it says that it could be 51%, basically 475 to that plastic rate cut they're expecting for the June. So right now for the March, it's other way around. Rate cut, there will not be any rate cut, is basically 62.5%. Salahuddin says, should we book profits? आप book profit करोगे क्या? You should book profit, but you should not go out of the market. And I've repeated time and again saying that please book profit where the companies have gone up. The share price of the company has gone ahead of the fundamentals. वहाँ पे definitely book profit करो. That does not mean that you take the money out of the market. You reinvest that money in those companies which has high potential to do well. Sometimes the company may not do well for 3 months, 6 months. That's the nature of the market. But if you're trying to time the market, which I'm getting a sense, Salahuddin sir, आप जब market नीचे होगा ना, आप में guts नहीं होगा पैसा डालने के लिए. The market will make a huge U-turn and you'll keep waiting for the market to come down, which will never happen, and you'll miss out big way in terms of the rally. So my request would be, yes, do book profit, but do not go out of the equity market. Reshuffle your portfolio, but remain invested in the equity market. That's what my advice would be. And that's exactly what we are doing in our PMS also. Nimesh is saying, honestly speaking, everything is good except returns on the markets mojo, as I am taking for last 2 years, but few small cap mutual funds consistently done better than moderate follow time and again. Please reply as I want to join PMS of markets mojo. Sir, I don't know which data you are taking, but I did compile some data some time back, and what we realize is that, and if you come tomorrow, maybe I'll show you some data about how the mid and small cap, what we call, have underperformed their respective benchmarks. So I may not have for 2 years, but I will definitely have for 1 year. And let me just give you some data. The data we have done, analysis we did for as of end of December 2023. We did that data. Okay, and I'll tell you that data. 1 second. Okay, so the data says that in 1 year, the scheme that outperformed in mid cap is 9%. Okay, only 7% number of schemes and 9% value has outperformed. In small cap, only 9% has outperformed their respective benchmark. So I don't know, sir, what data we are talking about. And the best category which has outperformed is Flexi Cup with 53% of the, sorry, I said corrected, multi-cap with 62% on terms of value. They have outperformed as of December 2023, 1 year. That is 1st January 2023 till 31st December 2023. This is the data. And Nimesh ji, my request would be just share your which model portfolio that you are looking at it, because I believe that it should have outperformed significantly the mutual fund. But nonetheless, I would like to look at the data and then we can take a call. Now coming back to whether you should want to join PMS or not. Clearly, we have two strategies within the PMS. One is a high risk, high return. One is little is medium risk, high return kind of stuff. Soul and power. And their IP, the score, the buying and selling criteria are a little different than what's available on the Markets Mojo website. So, and our investors, we have seen the taste of Infinity and they moved to the PMS because the IP remains the same. What was there in Infinity moved to the PMS. The same IP has moved. And many of them basically not only moved to the PMS, they've increased the allocation. The reason why they did that, because they could test the success of our Infinity's IP, and that's why they come to the PMS. If you wish to come to the PMS, please do come. Probability is very, very high that over a period of 3 to 5 years, our PMS would have outperformed very significantly, not to the benchmark, but most of the mutual fund schemes in the country. Mr. Samuel, in January 2025, sold 3.20 crore in India and 1 billion Brazil. But FI has invested 2% in South Korea and 1 billion Taiwan. Is this due to the results are not up to the expectation, your suggestion? So I don't think, sir, that this is something to do with the results actually. I think it's more to do with the profit booking. So it's not that someone is saying very gloom and doom. So which company said gloom and doom kind of a scenario, sir? Please help me understand. Post results. People have not said. In fact, on the contrary, people are optimistic that the things should improve going forward. I personally believe it's nothing to do with the, and I don't track the Brazil market, I don't track South Korean market, I don't track Taiwan market, so I would not be able to comment on that. But my personal understanding is that this purely because of profit booking, because market did extremely well in 2023 and they decided to lock in some of the profits and move to the other countries where they believe they still have a scope to invest now and make some profits. Our overall, again I repeat, outlook on FPI investment to moderate in 2024. We don't expect FI to invest as much as they invested in 2023. And what we are saying completely gel with what prediction we had made in the beginning of 2024. Subhasis sir say, I could not see mutual fund segment. Is the mutual fund segment removed? No, sir. Mutual fund segment is very much there. Let me see, since you are asking me, because I don't invest in mutual funds, so I don't look at mutual fund. But we do have a mutual fund section, sir. The personal portfolio, model portfolio funds, research. Is there, sir. You go to the, that, is it visible? No, okay, my screen is not visible, sorry. But if you go to that three top buttons, stocks, portfolio and the funds, you go to the funds, that's a mutual fund, sir. I think it should have been written mutual fund. I think that's what your sense, because that's a fund is mutual fund, sir. Samant is saying, what do you mean by IP, sir? It's nothing but the intellectual property. We have created certain big data analysis. Using big data analysis, we have created data analysis by which we decide which company we should buy, which company we should remain, continue to hold, and which company we should exit from the portfolio. Rahul Kumar, it is more than 4,000 stocks, but more than 5,000. 5,000. Should we get out of Mojo exited stocks underperforming benchmark and what either enter Mojo stocks? See, every investor, Rahul Kumar ji, has done various strategy. I have come across many people who have created strategy on our Mojo stocks. Someone said, I will get into Mojo stocks and at 25% gain, I will go get out. Someone said, I will hold Mojo stocks for 3 months and irrespective of what happens to the Mojo stock after 3 months, I'll get out, whether it's a profit or loss. So various people have done that strategy. So you can also create what suits you the best, but then follow the strategy in a very disciplined manner. So if you think it's Mojo stocks underperform, I should get out of it. Maybe you can try and test check that method before you start implementing in real life. Do some back testing in the sense, just observe that company. Okay, here I exited, what would have happened, and then continue to watch that company. Don't exit, but just observe that. And if the strategy seems to be playing out, then apply that strategy. My advice would be, as long as it's a Mojo stock, you should not exit. That's exactly what we do in model portfolio also. If it is a Mojo stock, we don't exit, irrespective of whether it's underperform or outperform. So I think you should logically go with the score. But if you wish to apply some rule there and want to see that if you are convinced that it can enhance my returns, please apply. There is nothing wrong with that. Nimesh sir, oh thanks a lot, sir. A lot of respect for you, sir. And you are heart of markets Mojo. Sir, I may be the heart of markets, but the brain is Mr. Mohit Batra and Joyson Thomas. But thanks a lot for the compliment. And I think there are many people. It's not the markets Mojo considers some of the brilliant leadership team. Okay, and if you look at the big, if you ask me very frankly, well, the brain of markets Mojo is Mohit and Joyson. The heart is basically our tech team. I know. I think it's completely. To analyze 4,000 companies on a daily basis, it's humanly not possible. If a lot of credit should go to our tech team. I think they are doing a brilliant job. My job is to come in front of you and discuss and give you gyan. But the real people working behind the scene is a tech team, and they are the complete, if you say, heart, liver, kidney, whatever you want to call them, they are the one. I am just one of the a small contributor to the markets mojo. Sushovan sir is saying, thanks for everything that we got from Mojo. Sir, my tax filing, can I subtract the subscription fee from a profit for my capital gain? So it's all depending upon you are showing this as a business income or you are showing this as a capital gain, which I think you are saying is a capital gain. Then I don't think, sir, it's allowed subscription fee from the capital gain. So please consult your financial advisor. He is the right person to do that. My understanding is that you cannot. That's my understanding. But the right person who can guide you is your financial advisor or tax advisor. Why? Because tomorrow if income tax is going to raise query, either way, I'm not going to respond to the tax advisor, the income tax department. Right? Your tax advisor is going to do that. So it's better you consult tax advisor. If I would be in your place, I would not be seeking a subscription fee as a deduction from my capital gain, because my understanding is it's not allowed. और सर मैं कितना बड़ा पैसा बचा लूँगा उससे? आई एम नॉट गोइंग टू सेव टू मच टैक्स ऑल्सो, सो वाई टू टेक द रिस्क? There is one stock in MM with a score of 84, a strong buy which I purchased the stock, and the next day score fell to 64 and stock fell around 10%. Why IP so volatile? Sir, Lakshmi ji, it could be because the score could have fallen from so much only because of the result. Now, if result is bad, do you suggest that we should not change the result? We should not change the score, which is wrong, am I right? So if the score of the company is, if the result is not so great, the score will come down. And since the result is not bad, score has come down, the share price have come down, which is in sync with what it is saying. So logically, what we are doing is the right thing. Now your question should be, why is IP so volatile? See, IP is not volatile. We are just giving, adjusting the score based on the new data points comes in. And that's the right thing to do. And in the process, if it is volatile, so be it. Why? Because ultimately, the score should reflect the fundamental and the technical parameters of that company as of that day. So I think that's a fair to do that and expect that. See what happens, sometimes one incident, we make a general comments. There will always be exception. Like how many companies which has happened in one day 84 to 64? Not many. But we'll pick up one company and say, oh, this is IP is volatile. So IP runs on 4,000 companies, not on one company. And if one company that has happened doesn't mean the company IP is volatile. Raful Gala, hello Sunil Bhai, what are your thoughts on the private capex? Right now it looks like government is doing all the heavy lifting. For stock market gains, private capex is also required, as we have seen during 2003 to 2000 bull model. Any thoughts on this and why private players are on the fence if everything in India looks like we are in Goldilocks scenario? In my view, this is one of the major risks that we can have direct impact on equity gains. Thank you for all your insights. So Gala sir, you are right that all the heavy lifting is done by the government, and the reason why government is doing heavy lifting because they know very well that private capex is not happening. Why? Because post-COVID, everyone wants to repair the balance sheet. Everyone wants to repair the profit and loss account. And hence, जब वो COVID आया, who could basically think of capex? They wanted to see that what existing capacity जो है, उसका भी तो consumption होना चाहिए. And government realized that, and government did that thing, and that's why they did that. If you look at so RBI publishes data on the capacity utilization, and if my memory serves me right, it was at 76% or something. In other words, we are on the cusp of starting a capex cycle, private capex cycle. Whether this happens 3 months down the line, whether this happens 6 months down the line, whether it happens 9 months down, but it's going to happen, and it's going to happen in a very big manner. Now, the nature of capex could be tourism related. Nature of capex could be expansion of the capacity to meet some of the goods and services and so on and so forth. But private capex is going to happen. I think one of the reason why private capex did not do that, maybe because of rate of interest when started moving up, and normally the private capex do take a back seat when the rate of interest are going up. Why? Because it increases your a break-even point little longer. It makes it a little longer. So I think they are waiting for the rate of interest to come down, and as and when that happens, my understanding is that RBI will cut rate of interest before the general election. Whether it happens on 8th Feb or not, I don't know. But that's my sense is. And as and when the private players get a comfort level, yes, the rate of interest trajectory is going to go down, and then I think that's the day they will see a lot of private capex coming in, and we would see that. So yes, it has not happened, but I'm very, very optimistic that private capex will happen in next 9 to 12 months. And as and when that happens, I think your worry that gains aren't going to get evaporated will not going to happen. I think, see, remember, it's not that private capital are not happening. A lot of people are setting up. It's not happening from the listed players, maybe so. But if you look at in electronics, a lot of people are doing private capex. If you look at on what we call semiconductors and green energy and so on and so forth, a lot of capex are happening. Even Coal India conductors, it's a government PSU, so they are going to set up a thermal plants and so on and so forth. But that's happening. It's just that it's not happening. Not many people are coming together to do that private capex. But I'm so sure in next 9 to 12 months, we could see a substantial private capex likely to go on stream. Yes, Sunil sir, result was not expected. The company is a small cap. So then, yes, then it's very right, na, sir, the score has to come down then. Yeah. There is no announcement of FAM scheme for EV subsidy. Does this mean that FAM 2 subsidy will be applicable to 31st March 2000? If my memory serves me right, when it's, I think the government did announce that FAM subsidy will get extended by 1 year, if my memory serves me right. And I don't think I have gone through that government budget speech also, and nowhere it has been mentioned. You are right. It is not mentioned anywhere. Even I can't recollect because I've gone through a lot of documents, budget documents, but nowhere I could come across this FAM subsidy. But my sense is that I think government did announce that it will get extended by 1 year or so. But I may be wrong in that. Vinitji, maybe what I can do, tomorrow I'm going to come in front of you again with my future analysis. Maybe by that time I'll go through and I'll come back on that. Do we have more questions, or we are saying that questions are there, but because of time shortage, we don't want to take more questions? So let's take up, because people are there on budget day, so let's not deprive them of questions. So let's take 5-6 questions more. I hope you people will not mind if I'm taking 5-6 questions more. I know it's going to hold you back, and your family members are going to curse me, but so be it. One day I can take a chance. Ramakant sir, can we expect major corrections before the election? Looks a little doubtful, sir. But it's a market. Market has its own wisdom. Market has its own logic. And why do we basically want to time the market? Elections aayega, nahi aayega. Someone, I'll give you a classical example. Someone in October 2023, when things were not looking so rosy, one investor said, "Mujhe paisa nahi dalna, investment nahi karna hai." And look at what happened to the market. In 3 months, January, the market completely turned around. So don't wait, because corrections aane wale se paisa nahi dalna hai. Only thing, if you think correction is going to come, you basically stagger your investment. Or if you expect correction is going to happen, please book profit. Please lock in the profits and go into those stocks which has a higher probability of making returns for you. So that's the way you should basically play your strategy. Rather than getting out of the market, you should say, how do I basically make use of my understanding about the market, and how can I maximize my returns? That's the way. See, remember, if the market is going to correct also, assume that is going to happen, what you are saying is right, you will not have guts to invest at that point of time. And hence, market will turn on at some point of time. You will wait for market to correct, और नीचे level में लूँगा, कभी होगा नहीं और आप फिर पैसा नहीं बना पाओगे. So 2 things I am saying. If you have a fresh money, you may maybe stagger your investment because you are expecting market to correct. In other words, every 30, one third, every 2 months you can invest. If you already invested in the market, lock in some of the profits. Well, some companies have gone ahead of the fundamentals because you expect market to correct. And if that's so, these companies are the first one to fall. Reinvest that amount in other companies which has a high potential to make money for you. Subramaniam sir, we say borrowings in common parlance is in the budget. Where does the central government borrow from? Sir, GSEC देखा होगा ना, आपने सुना होगा ना GSEC का. Okay, GSEC is nothing but the borrowing. And who subscribe to that? The banks, insurance company. And अभी तो GSEC आप और मैं भी ले सकते हो. So this is the way we are the people who fund that. And some of the deficits also get financed to the small saving schemes, you know, जो government की होती है ना, senior citizen का होता है, PPF का होता है. That's also fund allowed government to fund the deficits. The Ragini is saying some of the PSU stocks in railway, defense and green energy has given more than 100% return in past 3 months. However, most of them are sale or hold and they does not figure in momentum now stocks also. Your view on those stocks? तो अगर वो stock hold or sale है, don't get into those companies. But there are other stocks within the railway, defense and green energy which I buy. You buy those stocks. You're not saying that you have to basically buy each and every stock of railway, of defense and of green energy. And why do you want to restrict only the PSU? You can go out of the PSU basket also. With green energy, there are some good stocks available. Within defense, there are some good stocks available. Within railway, there are good stocks available. You invest in those. Faiz is saying, do you still recommend investing in silver ETF? My answer is yes. See, remember, again, you should invest in gold and silver as a part of your assets allocation. Because it will give a lot of stability to the overall wealth creation, overall portfolio assets that you have. And I do believe that silver should do well. If you remember, in my Equity Outlook 2024 also I said that that they should give return in double digits, and I maintain that they should give double digit returns for 2024. काकू जी इज आस्किंग योर व्यूज गाइडेंस में प्री IPO ट्रेडिंग. सर उससे दूर रहो तो अच्छा है. आई नेवर डिड इन माई लाइफ, एंड रीजन आई डिड नॉट डू इट बिकॉज हाईली वॉलेटाइल. I can't stomach this kind of a volatility, to be very honest with you. So I have always stayed away from it. I may be a little biased, I may be a little old school of thoughts, so be it. I don't recommend to anyone because I'll only recommend those things which I am comfortable doing it. Since I am not comfortable, I am advising you to stay away from that. What are your views, Harnish is saying on ethanol blending in India? Excellent. See, yes, the government has basically to control sugar prices, have given some ban. But I think government plan is very clear cut. That ethanol blending program, they have not basically put on a burner. They will, once the situation improves on sugarcane side, I think government will go aggressive on ethanol blending. Also, it's more feasible. Why? Because you don't need to import so much crude oil, because we need to import crude oil. Blending helps us to reduce the dependence on the fossil fuel. So I think government is just a temporary setback. I believe it's a strong future. Not only ethanol, the companies which are into ethanol manufacturing, but those also who are into manufacturing plants for the ethanol. The future looks extremely good, promising. Mani, would you be able to provide recognition in the sectors to benefit? Yes, I did. Mani sir, I did mention that in my presentation, which are the sectors are going to benefit because of budget. So yes, sectors I can definitely, and I discussed that also, sir. This webinar would be available on the YouTube, am I right? So my request to you, sir, I did make a presentation. You can watch this video where I did mention which are the sectors that are going to get benefit because of budget. Manish says, yes, Mr. Nasti, can we see the history of the score on daily or monthly basis to know which trend of the stock? So we do mention, sir, below the score of the company, when did the score change of that company? So that is available. But, the complete daily score of the company, I'm not very sure that's feasible or not. My request would be, Manish ji, please ask this question to Karan, because he is the right person to answer that, whether it's possible or not possible. It is not my area of expertise or my area of domain to give comments on. Had it been something on PMS, I would have definitely given answer. But it's pertaining to the markets. Mojo, my request would be to please speak to, please ask this question to Karan, please. I know we will have more questions, but I did ask Amir to just pick 5-6 questions. Anyway, I'll be there in front of you tomorrow again. Some of the questions which I could not pick up today, we'll try to, please ask that question tomorrow and we'll try to pick up those. Again, just to summarize of today's webinar, no change in the direct or indirect taxes. The budget is continuation of what government has been stating in the past. In other words, no positive or negative surprise from the budget. Market moved in a very narrow range when the budget speech was made, and overall market did not move either way, up or down. From tomorrow onwards, market will start looking at geopolitical situation. Market will look at what RBI is going to do, how Indian earnings are, so on and so forth. And of course, we have another major event, election. So our outlook for the market, which was there before budget, remains the same post budget also, and hence there is no change in the view. India is going to 2024 is going to make a nice base for next leg of rally for the market, and we believe that's going to happen. With this, thanks for having a patient listening. Good night, take care.